I promised everybody I want to give you the scares of what taxes happen, what you have to pay, how you can save money, everything. The other side of my business is helping people out afterward. And now, obviously, I don't go as far as Kim. I'm not going to show up at the court for you. But before it gets to that point, what happens when you make a mistake with your taxes? Most people do not know what is going on with their taxes. Their taxes are this mystery box. They work all year long. They get their W-2. They type it into a computer program or see somebody, and then they tell them, jackpot, you got a refund. You have no idea what's going on before it happens, and that's the biggest problem. You don't know what's happening, and when people do not know what's happening, they are afraid. They are afraid of the IRS. They're afraid of talking to their accountant because they don't know what's going to happen. And they're afraid for a lot of reasons. They have unfiled returns. They want to do their returns, but they're missing documents from old employers, rental companies, whatever have you. They have taxes due from back years. They don't know how to handle these large amounts. They don't have the money to pay right now. Or they've made mistakes on their returns. They claimed an exception they shouldn't have. Their child moved out and they kept claiming them after they left. They forgot to claim a new child. They have unreported income on their items. Maybe they forgot to claim an education credit that they've been qualified for years. All these are real easy fixes. But since the IRS's response is, get the form 1040X, add to it a Schedule C, people are instantly afraid. There's all these numbers, form numbers coming at you, telling you to document stuff. So let's start with the easiest thing. Do you have unfiled returns? If you have unfiled returns, your statute of limitations never starts. The IRS can come after you forever. So, you still want to file a return. In fact, you always want to file a return even if you can't pay. The IRS has multiple sets of penalties. If you do not file, there's an extra 5% per month they will charge you up to 25% of the unpaid taxes. So even if we've got April 15th coming up in a couple of weeks, even if you do not have the money to pay, you need to file to avoid the secondary penalty. If you want to do past returns, the first thing most people are missing is their information. Missing documentation is real easy to take care of now. The IRS has a new program. You can go directly to their website, irs.gov. Right on the front page, it has a Get My Transcript button. You can click on there. You can get a wage and income transcript. This will report all 1099s, W-2s, homeowners' mortgage payments, or mortgage interest. Everything that gets reported to the IRS is on this. And if you don't file a return, this is what the IRS bases your estimated taxes on and what they try and collect. The second thing you can get is an account transcript. This will list when people start asking, where's my refund? And they go to the Where's My Refund program and it doesn't say anything. You can go into your account transcript and it'll tell you by date the different codes, why you're being held up, what they're looking at, if they're adding extra penalties, I've had clients that they actually added more credit onto the things. So they got larger refunds because they had not reported estimates they had made or anything. The account transcript will list all of your estimated payments. The wage and income transcript will list all of your 1099 stock sales, W-2s, all things like that. With those two documents, we can recreate just about anybody's tax return. And they're freely available, easy for you to get off the IRS website. Once you have your missing documents and you're filing your last returns, you have taxes due. Statute of limitations for the IRS to collect is 10 years from the date of filing. So, like I said originally, if you do not file a return, the statute does not start until you file the return. They have 10 years to collect after you file it. If you do not pay, there's the second one, is 0.5% per month. Increases to 1% once they've requested the funds for you. So 0.5% a month is a whole lot less than 5% a month. File your return. If you do owe, you can do an installment agreement. Real easy. If what you owe can be paid as under $50,000 and you can make an agreement to pay it back within 72 months, they will accept it. If you agree to have them pull it directly out of your bank account through EFTs, then they will drop your penalty down to 0.25% per month. So there's another 70 or 0.75% in penalties you could reduce. If it is larger than that, what they're looking at is a 10-year statute of collections. So they want to make, if you're going to an installment agreement, they want to make sure your installment agreement will pay off what you owe within 10 years. They will usually be willing to forgive penalties in that. They cannot forgive interest. Interest is statutory. If what you owe is beyond that, or you do not have the ability to pay, they have an offer in compromise. This gets a little more complicated. If you need to do an offer in compromise, the IRS will have you fill out a form. There's one of those form numbers, 433-A. 8 pages long. You have to list on it every source of income, every asset you have, and your normal expenses you are paying for living expenses. They're going to compare your expenses to charts they have made up for your area, and they'll use that in your income to determine what you have and what they consider your disposable income. That lets them know how much they can expect to collect before your 10-year statute runs out, and they'll use that to base their offer. Now, obviously, you can just give this information to the IRS, and they're going to come back and say, you owe this much. We'll accept this much. Or you have to tell them how much you're going to owe, and they'll say whether or not they accept it. If you run with the IRS's numbers, of course, their ranges, they're going to pick the lowest expense in the range. If you live in Huntington Beach, they're not going to pick the $2,800 two-bedroom apartment for rent. They're going to pick the $750 I'm renting a room from somebody's mother rent. So that's where these companies that call you up and tell you you can, or you hear them on the radio, they can get you for pennies on the dollar, get rid of the IRS, they'll get them for everything. They do work part way. You can do the same thing through any experienced CPA or enrolled agent. And what we're doing is, since we know what these standard tables are the IRS uses, we just make sure you fit the table, but on the higher end of the table. So that way, we don't want you to be paying more than you have to. This isn't about avoiding taxes. This isn't about tax evasion. This is about exercising your rights to make sure that you are paying what you owe and not what you don't owe. But no, we can help you with that, or like I said, there are those companies that'll charge you $2,000 to have some monkey in a back room type it into a form and mail it off to the IRS just like you could have. The last part is what happens about the returns you filed that had missing information and mistakes. Lots of things. You have 3 years from the date you file, or 2 years from when you pay off the taxes for that year. So if this is a past year, years ago, that you made a mistake, you forgot basis on some stock sales. I've actually done that one for a client that had a $100,000 lien because they forgot to put their basis on all their stock sales. They actually had losses. And 10 years later, we were still able to go in and file an amendment and get all their money back because they had just finished paying off the amount within 2 years. So those are your two numbers. 3 years from filing, the later of 3 years from filing, or 2 years after you pay off your debt. When you file amendments, you can change just about anything on the tax return. There are certain limitations. If you and your spouse filed separately, you can amend to file jointly. If you file jointly, you cannot amend to file separately. When you file a joint return, you are jointly and separately liable for the taxes. So you cannot separate that afterward. If it is particular situations where you did not know what your spouse was doing, or they had debts from prior to the marriage that are their own debts, you can file for innocent spouse relief. It can be tricky. It goes both ways. You can either file it to get your refund out of your guy's current income for the year instead of having it applied to their past debts on their side, or on the current year, you can file it to separate yourself from anything they have done. If you have a spouse who's hiding money in the Cayman Islands and you didn't know it, there is some protection for you. If you've missed exemptions, if you thought your parents who are living with you that don't make any money and you support them wholly, so you didn't bother claiming them because you didn't know you can go back up to 3 years later, claim their exceptions, get additional taxes off. If you have undeclared income, you forgot something. Usually the IRS will send you a nastygram. Nastygram, TM. They're called a CP200. They tell you that what they have on their records doesn't match yours. If sometimes it's not going to be there and you still want to report it. If you're trying to get a loan for a house and they're looking at your transcripts for your tax returns for the past 2 years and you don't have enough income because you forgot to report something that you were doing on the side, you might want to pay your taxes. Number one, so you don't end up with the IRS knocking on your door, but also so that way you can get your loan and you have your income documented. If you have unclaimed credits, a lot of people, I just went back and amended my fiance's returns for the past 3 years because she has not been taking her education credits as a full-time student. She received $3,000 in refund checks this week. So, if you have credits, childcare,
honeymoon,
yes, childcare, earned income credits, these are all things that you have to actively go request the IRS. I qualify for these. Give me my money. Like I said, incorrect stock basis. If you forgot that, if you just reported the number where your stockbroker said you sold $50,000 in stock and you paid taxes on it, you might want to go back because obviously you bought the stock at some point and you only have to pay taxes on the profit. Or other missed deductions. If you have itemized deductions, if you're itemizing and you forgot to put on there your property taxes for your automobile registrations, most people forget, charitable gifts that you gave, lots of little things. In the end, what it's all about is whether or not you know the law. Because there's two systems, I've shown this one before, there's two tax systems in America. One for the informed, where you plan ahead, you don't pay in extra taxes, and you make a living. And for the uninformed, the people who go to the corner tax preparer with their W-2s each year and roll the dice to see whether or not they got a jackpot. It's better to know what you're doing. So, any questions? Yes.
How long should you keep your business tax returns? I mean, if you do, how long should you keep your tax returns, period?
Okay. It actually depends on what's on them. In the general case, the IRS will go back up to 3 years. If you have committed fraud, they can go back farther. So you want to look for that. Usually it's 3 to 7 years when you keep, unless it's something like the original year you purchased your house. Because those numbers on the house or on a rental property or anything like that are going to have figures that you need to keep for the entire life of the house until you sell it, plus the 3 years after. So in general, tax returns, 3 to 7 years. Supporting documents for the tax returns, bank statements, credit card statements, about 3 years. You don't need to keep all the little receipts. You can usually summarize those. The IRS will accept them or scan them, make it easy. And then documents for permanent stock purchases, IRA investments, Roth contributions, home purchases, rental property, anything like that, you want to keep for the life of the property plus the 3 to 7 years.
Do you have any opinion on Neat Desk? You know that machine that you scan everything and it puts it into a form?
I do not use those. I know the ones you're speaking of. In fact, they integrate with our software, and we did some tests with them. They have about an 80 to 90% accuracy, which sounds great until you realize that means everything you scan, you now have to turn around and go through line by line and make sure it scanned it right. So it doesn't matter, unless the accuracy is 100%.
Because some people walk into a tax person with an envelope full of little tiny receipts.
Yes.
There's no organization there. It's embarrassing.
We have clients that do that, and we have no problem with that. We have a bookkeeping company we work with called Priority One Bookkeeping. They are much less expensive than I am, and we will go with you. We will either, you could drop it off, or we'll take you over there to introduce them so you know who's looking through your stuff. They will line up your receipts, separate them into who they paid, put them all in an Excel spreadsheet really inexpensively, and get them back to us.
How does that Neat Desk make mistakes? What kind of errors does it make?
It's using optical character recognition. It's scanning the thing and then trying to compare the scan, the picture of the letters, to the fonts it knows. So if you went to some place where they don't use a standard font, the O's have slashes through them, or the 5s.
Photocopy.
It does put a copy in there, but that's only half of it. It makes a copy and puts it in the file. The second half is it scans it to get the text out of it.
So then you can search it.
Yeah, it's supposed to like pull out tax, and if they label it 7.5% tax instead of sales tax, it doesn't know where to put it. So it's just a matter of
So for a
not having enough.
normal person.
All right, thank you.